Welcome back to my channel, fellow investors. In this video, I'm going to be covering the stock market and how the stock market continues to go up in value week after week. It started in mid-October, and this past week, I thought for sure we were going to end up lower, but the S&P actually logged a small gain, which was incredible. You have stocks like Nvidia just going parabolic, yet it also had some down days. You have certain stocks just going up off the charts and certain stocks beginning to really fall quickly. It's really signs that there is fatigue in this raging bull market, but what's going to stop it? It's been week after week. I've been pessimistic that it would continue, but I've been surprised week after week. This coming week, there is a lot of activity happening that could affect markets. First, the Federal Reserve has a active week. They're going to be making a decision on interest rates. And I expect they're not going to move interest rates. They're going to leave them where they're at. But what can move the market is their comments. If they comment that they need to be restrictive, maybe more than they had previously commented, then we could see the stock market really go down because then investors would have to revalue stocks and revalue conditions. The other thing that can happen is NVIDIA has a big conference coming up, and this big conference is supposed to really showcase all the AI miracles and applications that are coming out. And if the market really receives that information or update well, that could cause a rally in stocks like Nvidia and everything else within the AI complex. On the flip side, if it's a dud, if we show up and there's a conference with a lot of intelligent scientific people just talking science without any real business use case, the market can perceive it as, AI is not ready for prime time and stocks can really go down. It'll be an interesting week for sure. And I wanted to record this video just to show you what I'm seeing and what to expect in the coming weeks based on the news that happens. And I'm ready at any time. It's always a good market to buy into companies that I believe in, and I tend to buy on down days. If the market goes down, it's a great opportunity to buy into shares in companies I really want. If the market goes up, then I really look at my investments and watch them go up in value, which is fun. But there's less activity, less buying activity under those conditions. Let me show you more information and more data that I'm seeing. Looking at trading activity just for Friday's activity, the S&P was down 0.71%, the Dow was down, and the Nasdaq was down almost 1%. The Russell did rise in value, so the small stocks did outperform for that one day. But as we look at the full week, the S&P did have a gain, the Dow did have a gain, and then the Nasdaq went down just slightly, and the Russell went down. And that volatility was really interesting to see. Now, if we look at year to date, the S&P is having a very good year in 2024, the Nasdaq as well. And the other two indexes, the Dow is having, a good year. 2.65% for the Dow is a good year. We're not even done with one quarter. And the Russell's lagging still. Over the past year, we have seen just tremendous gains in the S&P and the Nasdaq. And if you look at when was the last time we really had a strong pullback, it was in October. And that's what I'm looking at. And this is what I consider a raging bull market is if you look at from October 27th to this point, it's just been up and to the right with very little pullbacks. And I think that, just to have a normal market, we need a strong pullback 10, 15% just to really get prices back down to earth and have valuations that make sense. I'm a value investor. I like buying discounted stocks. So if stock prices keep going up and up, it's somewhat uncomfortable that, hey, my additional capital that I continue to put in my portfolio, I'm buying it at higher prices. So it'd be nice to see that pullback just so that we have a normal market. Pullbacks are normal. We had two of them in 2023, a pretty significant one that started around the late July timeframe, and then it ended around in the October timeframe, and then we started this really big rise. We also had a small one at the beginning of the year, and that was a small pullback. But over the course of time, looking at the 5 year, you see where that pullback happened. 2022, of course, was a down year. That was a pretty good correction, and we kind of needed that because we were just on a really nice rise from 2020 up to the end of 2021. So these pullbacks, normal thing. This raging bull market, not sustainable forever. I think the raging bull market's going to have to end at some point. Now let me take a look at sectors, and sectors tell you which industries are really going up and which are going down. And for Friday, it looks like information technology had a down day, and that makes sense. There's just a relief of the Nvidia rally. There's a relief. I think Adobe was down significantly. So there was some pretty big players that brought down the information technology sector. Communication services also was down. And this is where you have Alphabet, Meta, Netflix, companies like that. Understandably, consumer discretionary was down significantly. That makes sense. And the S&P was down overall. The one sector that did work was energy. We were seeing oil prices go up, which helps oil companies and energy companies. Utility companies were up and industrials were up, which is interesting in materials as well. If we look at the 1 month, and energy has been the number one sector. That makes sense with rising energy prices, materials, and that's interesting. Materials is going up, and then utilities, financials did well, consumer staples did well, industrials and real estate. So there's some sectors there that I think have a lot of value. They haven't participated in this crazy upward rally that we've had. Some companies like Nvidia, Meta, Bitcoin, they have just been going up so fast that they pull up the whole index, the S&P index. But a lot of companies, really good companies in industrials, consumer staples, even financials, they get left behind. They don't participate in that upward rally. So I think there's a lot of good value there for a value investor to find in those particular companies. Looking at year to date, for the year to date, communication services is a number one, sector. Again, that's Meta, Alphabet, Netflix, and then information technology is there. The semiconductor industry within information technology has just been booming, and that's led by NVIDIA and the whole AI push. And then energy is really showing up. That's good to see. Energy had a bad year in 2023. It just was a bad year for energy, and it looks like it's beginning to rise. I own Chevron, and the reason for it, it's my hedge, right? If energy prices go up, I think for the most part, the economy suffers and other sectors will suffer. But my Chevron stock will be doing well. And it's a pretty large position. Um, Once upon a time, I worked at Chevron, so I have stocks from that time when I worked there, and then I've always added on to that position. Financial services is doing well, and that was an expectation I had in 2023. It didn't do well. If you remember the bank scare that happened in the late spring of 2023, it really brought down prices. And for me, as a value investor, it was a great opportunity. I bought up a couple banks, U.S. Bank, as well as Citibank or Citigroup, as well as other financial services companies like Allstate, which is an insurance company, and that's doing great. So I'm glad that I got into financials. So those are sectors that are working. Again, I'm looking for value, maybe sectors that were left behind in 2023, and that would be sectors like healthcare that got left behind, industrials. I'm buying into 3M, materials. As the economy begins to grow, we're going to need materials, consumer staples. So those are sectors that have good value. And I'm always looking for high quality companies in all sectors, including information technology and communication services, even though those prices tend to be really high. I think some of those prices, Adobe's a good example. It came down significantly in one day. Well, if it keeps going down, I might buy into Adobe. I've owned the stock in the past, and if it gets down to a good valuation, I'd be a buyer. The other stock that I'd put out there is Tesla. Tesla's been on a downward, slump. It's down, I think, a little over 50% from its recent high. And Tesla is such a good company and such a valuable brand. If it continues on that down, recessionary kind of stock price, I might have to buy some Tesla stock because I'll buy it when everybody hates it, and then when everybody starts liking it again, it'll really rise in value. So we'll see how things play out, but those are the sectors that I'm monitoring, and that's what I'm seeing from a historical standpoint. So we'll see what stops this raging bull market. Something's going to stop it. I just don't know what. It might be the Federal Reserve. It might be just investors, getting out of certain positions and taking stock gains. What's interesting is usually really strong bull markets end without any particular reason. Just, a certain set of investors, especially these big investors, get out of positions. It causes a sell on a stock, and next thing you know, we have a good pullback. We'll see when it happens. I'm still betting that it's going to happen at some point soon because it's just a natural occurrence, and we've enjoyed a really nice bull market for 5 months, but it's been too nice, and I expect that we're going to have a pullback at some point. I really appreciate you watching the video. I hope you found it interesting.